So the market has been on an absolute tear, but now it seems to have hit the brakes. And the big question everyone's asking is this just a healthy pit stop, or is it a warning sign of a bigger problem? Let's dive right into what the top technical analysts are seeing this week.
I mean, this is it, isn't it? The question on every single investor's mind. After such a massive run-up, any kind of weakness feels pretty unsettling. So, is the party over?
Well, the expert consensus is a pretty resounding no. They're not seeing a reversal. Instead, they think the market is just taking a much-needed breath. And honestly, understanding that difference is absolutely crucial for how you navigate things right now.
Okay, so let's zoom out and look at the big picture. The main theme this week is a word you're going to hear a lot: consolidation. But what does that actually mean for the market?
Think of it like a marathon runner slowing to a steady jog to catch their breath before the next big push. That's basically consolidation. The market isn't crashing, it's just moving sideways, trading in a tight range. And why? To build up a really strong foundation for its next potential move higher. It's all about building a solid base. And this quote from Dharmesh Shah at ICICI Securities just nails the expert mindset perfectly. He's saying we really shouldn't look at these little dips as a bad thing. In fact, it's the opposite. He says they're an opportunity, a chance to buy high-quality stocks at a better price.
Okay, so if the market is trading inside a range, what exactly is that range? Let's get specific and lay out the key levels you need to have on your market map this week.
Here it is, laid out as simply as possible. You've got the floor, which is the support zone, down around 23,400 to 23,600. This is where buyers are expected to jump in. Then you've got the ceiling, or resistance, up around 24,250 to 24,500. That's where you might see some selling pressure. For now, we should probably expect the market to just bounce between these two levels for a bit.
So why now? Why is this pause happening? Well, there are a few technical reasons. Sudeep Shah points out that the index has slipped below some key short-term averages. And those momentum indicators that traders watch, the RSI and MACD, they're softening up a bit. Honestly, this is all pretty natural after a fast run-up when people start taking some profits off the table.
All right, so knowing the range is one thing, but how do you actually trade it? Let's open up the expert playbook and look at some real actionable strategies. What's really interesting here is that we have two totally different, almost opposite strategies. On one hand, you have Dharmesh Shah who's saying, buy the dip, use any weakness down to that support floor as your chance to get in. But then you have Sudeep Shah who's advising patience with buy the breakout. He's saying wait and only go long if the Nifty can punch above that ceiling. So you see, two very different approaches for two very different types of traders.
But hey, what if you're somewhere in the middle? You're optimistic, but you still want to be careful and manage your risk. Well, turns out there's a strategy for that too.
Tanmay Shah over at SIL suggests an option strategy called a bull call spread. Now, don't let the name scare you off. The logic here is actually super simple. You buy a call option at a lower price, like 23,900. Then, to cut down on your cost and risk, you simultaneously sell a call option at a higher price, maybe 24,400. And what this does, as you can see in step 3, is it caps your maximum loss. It's a clever way to bet on the upside while putting a really clear limit on your downside risk. It's perfect for that moderately bullish view.
Okay, let's shift gears from the broad index to where the analysts are spotting specific opportunities. Time for this week's top stock picks. First one up is from Dharmesh Shah, Power Grid. The whole story here is in the chart pattern. See, the stock broke through a really important long-term resistance line, and now it's forming what's called a bullish flag. That sharp move up is the flagpole, and this little sideways drift is the flag. For traders, that's a classic signal that the uptrend is likely to continue.
And here's another fantastic example, this time from Sudeep Shah, Graphite India. This stock has been winding up tighter and tighter inside this symmetrical triangle pattern, which basically shows a big fight between buyers and sellers. And the key signal? It just broke out decisively from that triangle. That suggests the buyers have won the battle and the stock has some real structural strength for a move higher. And here they are, all the top picks in one place for you, including JSW Steel, Cochin Shipyard, and Aster DM Healthcare. This table gives you all the crucial numbers you need, the recommended buy range, the price target analysts are looking at, and of course the all-important stop loss to help you manage your risk.
So we've covered a lot. After all that analysis, what are the most important things to walk away with? Let's boil it all down to your final takeaways.
Okay, 3 key things. Number 1, remember, this is consolidation, not a correction. It's a healthy process of building a base. 2. Know your zone. Right now, the whole game is being played between that 23,400 floor and the 24,500 ceiling. And finally, number 3, plan your play. Decide right now if you're a dip buyer or a breakout buyer and have your plan ready to go.
Look, the expert consensus is crystal clear. This pause isn't something to be afraid of. It's something to build a strategy around. They see real opportunities popping up. So the final question really isn't about what the market will do next. It's about what you will do. Are you prepared to act?